The money in your pocket is dying. The future of finance is already being built, and it looks nothing like you imagine. Are you ready for the revolution? For centuries, money has been a tangible thing. A coin, a banknote, a plastic card. We've understood its rules, its limitations, its physical presence. But what if the very concept of money, as we know it, is rapidly evolving beyond recognition? What if the future of finance isn't just about new forms of currency, but entirely new systems of value exchange, ownership, and control that will fundamentally reshape our economies, our societies, and our daily lives? The revolution is already underway, and it looks nothing like you imagine. Are you ready to step into a world where cash is obsolete, crypto is just the beginning, and central banks are facing their greatest challenge yet? Today we're going on an exhilarating journey into the future of money. We'll explore the groundbreaking technologies, the radical ideas, and the profound implications of a financial landscape that is being built right now, beyond the familiar confines of traditional banking and even current cryptocurrencies. This isn't just about technological innovation, it's about a paradigm shift that will redefine power, privacy, and prosperity. Prepare to have your understanding of value fundamentally transformed. Let's unlock the financial future. The most immediate and perhaps most impactful shift on the horizon is the rise of central bank digital currencies, or CBDCs. Unlike decentralized cryptocurrencies like Bitcoin, CBDCs are digital forms of a country's fiat currency, issued and backed by its central bank. Think of it as a digital version of the cash in your wallet, but existing entirely on a ledger. Why are central banks around the world, from China to the Eurozone, actively exploring or even launching CBDCs? The motivations are varied: to increase financial inclusion, to improve the efficiency of payment systems, to reduce the costs associated with physical cash, and crucially, to maintain monetary sovereignty in an increasingly digital world. For governments, CBDCs offer unprecedented levels of control and transparency over financial transactions. They could enable targeted stimulus payments, prevent illicit activities, and even implement negative interest rates more effectively. For citizens, it promises instant, secure payments, but also raises significant concerns about privacy and potential government surveillance. The implications for commercial banks, who currently act as intermediaries, are also profound. CBDCs represent a direct link between the central bank and the citizen, a fundamental re-architecture of the financial system. On the opposite end of the spectrum from centralized CBDCs lies decentralized finance, or DeFi. This is a revolutionary ecosystem built on blockchain technology aiming to recreate traditional financial services, lending, borrowing, trading, insurance, without the need for banks, brokers, or other intermediaries. It's a vision of a truly open, transparent, and permissionless financial system. DeFi leverages smart contracts, self-executing agreements coded directly onto a blockchain to automate financial transactions. This allows anyone with an internet connection to access financial services, often at lower costs and with greater speed than traditional systems. Imagine taking out a loan without a bank, or trading assets directly with another person without a brokerage. While still nascent and highly volatile, DeFi has demonstrated the potential to disintermediate vast swathes of the financial industry. It promises greater financial inclusion and censorship resistance, but also carries significant risks related to smart contract vulnerabilities, regulatory uncertainty, and extreme price fluctuations. It's a bold experiment in a truly programmable economy, where money isn't just a medium of exchange, but a dynamic, executable code. Another transformative trend is the tokenization of real-world assets. This involves representing ownership of physical assets, like real estate, fine art, commodities, or even intellectual property, as digital tokens on a blockchain. This process can unlock immense liquidity and create new investment opportunities. Imagine owning a fractional share of a multi-million-dollar painting, or investing in a piece of commercial real estate with just a few $100s. Tokenization makes this possible by dividing large, illiquid assets into smaller, easily tradable digital units. It can reduce transaction costs, increase transparency, and broaden access to markets previously reserved for the ultra-wealthy. For example, a luxury yacht could be tokenized, allowing multiple investors to own a share, or a piece of land could be tokenized, simplifying its transfer and management. This blurs the lines between traditional and digital assets, creating a hybrid financial landscape where physical value is seamlessly integrated with the efficiency and transparency of blockchain technology. The future of money is also deeply intertwined with the evolution of digital identity and programmable money. Imagine a world where your digital identity is securely linked to your financial transactions, enabling seamless, secure, and highly personalized financial services. This could revolutionize everything from credit scoring to fraud prevention. Programmable money, a concept often discussed in the context of CBDCs, takes this a step further. It means money could be issued with built-in rules or conditions for its use. For example, stimulus payments could be programmed to expire if not spent within a certain time frame, or funds allocated for specific purposes, like education or healthcare, could only be used for those purposes. While this offers immense potential for efficiency and targeted policy implementation, it also raises significant concerns about individual autonomy, privacy, and the potential for unprecedented levels of financial control by governments or corporations. It's a powerful tool that could reshape how we interact with money, moving it from a neutral medium of exchange to an active participant in our economic lives. While much of the focus is on digital currencies, the future of money might also see a resurgence of alternative currencies and barter systems, particularly at the local or community level. In times of economic instability or as a response to perceived failures of traditional systems, communities often develop their own forms of value exchange. This could include local currencies designed to keep money circulating within a specific geographic area, or time banks where individuals exchange services based on hours of labor rather than monetary value. Beyond these, some futurists envision a reputation-based economy where social credit or trust scores become a form of currency, influencing access to goods, services, and opportunities. While these systems may not replace national currencies, they offer resilience, foster community, and provide alternative pathways for value exchange, particularly in a world grappling with issues of inequality and resource distribution. They represent a more human-centric approach to money, rooted in relationships and shared values. Finally, a technological force that could profoundly impact the future of money, particularly digital money, is quantum computing. While still in its early stages, quantum computers have the potential to break current encryption standards that secure most digital transactions, including those on blockchains. This poses a significant threat to the security and integrity of all digital currencies. However, researchers are already working on post-quantum cryptography, new encryption methods designed to withstand quantum attacks. The race is on between the development of quantum computing capabilities and the implementation of quantum-resistant security protocols. The outcome of this race will determine the future security of our digital financial systems. It highlights the constant evolution of technology and the need for continuous innovation to protect our assets in an increasingly complex digital landscape. The future of money isn't just about what we use, but how securely we can use it. So, the future of money is a vibrant, complex, and rapidly evolving landscape. From centralized digital currencies to decentralized financial ecosystems, from tokenized real-world assets to programmable money, and from alternative community currencies to the looming impact of quantum computing, the way we create exchange and perceive value is on the cusp of a profound transformation. This isn't just a theoretical discussion. These changes will impact your daily life, your investments, your privacy, and your relationship with institutions. Understanding these trends isn't just about staying informed, it is about positioning yourself for the opportunities and challenges of a financial future that looks nothing like the past. The question isn't if these changes will happen, but whether you will be ready to navigate them. Are you ready for the financial revolution?